Assalamu alaikum wa rahmatullahi wa barakatuh. Good day, everyone. My name remain Rufai Ismail Olayinka, and today we'll be talking about the misconception about Islamic finance. Many a times, many have raised concern, and they have some opinion that there is no difference between Islamic finance and conventional finance. However, for us who are involved, we can tell you vividly that technically and theoretically, there are differences between Islamic finance and conventional finance. So, like we mentioned, when you look at it vis-a-vis the principle, yes, in the conventional finance and the Islamic finance, they both invest in business entities that are legal. So, meaning those business entities must be business entities within a sovereign nation that are permissible. So, meaning you also have to follow the government lay down rules and regulation. I cannot go and invest in any activities that have some penalty attached to it by the government. So, meaning investment in any drug, hard drugs, or anything in relation to any of these impermissible aspects. However, why the conventional finance can invest in alcohol, they can invest in interest bearing securities. A financial institution operating under the under the Islamic window or the Islamic ecosystem cannot invest in such kind of activities. And when you look at it technically, there are difference between interest rates and what? Profit. So what is profit? It's very simple. When you engage in any business activities, which is buying and selling, it is allowed for you to make profit. And let me also tell you this, there is no limit to the profit you can make in any business activities. However, you should be what? Compassionate. You should be compassionate by not exploiting people, just like these days, whereby you have people complaining that there is no money. But in the same economy, you have some people increasing in their revenue, and their profit they are generating is also increasing day by day. Why? Because probably they are not putting the social factor to their business activities. Yes, there is nothing stopping you from making profit in a business engagement or business activities. However, you should be compassionate. And this compassionate is where Islamic finance lies. So let me give an example. Whenever there is a change in the macroeconomic dynamics within an economy, be it inflation or the interest rate has been projected by the central bank of the country, the commercial banks or the conventional financial institution automatically adjust the rate in which they use in financing whether new business entities or already existing business transaction. So meaning already existing financing activities between the bank and their client will adjust to that particular rate immediately. Why? Because it is interest based. It has no underlying asset attached to it. However, when it is Islamic finance, is a different thing. I finance a particular business activities using Moraba. And in this case, is a sales contract. And at that point, the contract has been concluded. All what the client is doing to me as the financial institution is that he's paying me back my cost plus markup as agreed. So no matter how the increase or the decrease in the exchange rate in that particular economy, the agreed markup we've agreed 12 months ago will continue to be the same markup that same person will be paying throughout the business activities, irrespective of whether the inflation rate have increased 100% within that period or not. So meaning you are not engaging that particular entities based on the interest rate or the inflation that have been that is being determined at that particular point. It is based on what have been agreed by both parties. So meaning you are not changing the markup that have already been agreed by both parties. But in the conventional area, that markup will be changed as the MPC or the inflation rate is changing periodically. So can you see that on this face value, even by not going technically into the contract, that they are not the same? Yes, they can never be the same. So let me take an example. When you go to a normal Islamic financial institution to seek for financing, no money will be given to you in cash, except when that money will be given to you based on Mudaraba. And the Mudaraba means you have a business entity that will be generating profit. And it is the profit generated by business entities that both parties will share. So it is not that I'm giving you money to go and marry and you'll be paying me back a markup. No, this is not how an Islamic financial institutions operate. So let me use a Muraba contract. You finance a client using Muraba, which could be purchase of any materials. It could be building materials. It could be home use assets. It could be in an industrial machine, but it should be something that has a value. So meaning I purchase this item at 10 naira. Am I allowed to make profit through trading? The answer is yes. I purchase an item 10 naira, and the client will also know that this item is purchased actually at the rate of what? 10 naira. So I can sell this asset to you at 20 naira, meaning I've made a what? 100% profit in this particular transaction. This 20 naira, which will now form the cost plus markup of this particular asset I bought at 10 naira, can be paid under a 12 month. So meaning it is expected that the client will pay me back in 12 months. Irrespective of whether the inflation rate have increased or not within that 12-month period, the client is also just paying you back that 20 naira within that particular period. No increase of any magnitude will affect that particular transaction. Why? Because it is a sales transaction. It is not a loan. It is a sales transaction. And when you sell something to somebody, it is expected that that transaction have concluded at that point. All what is expected is because you only sold it to him, based on a deferred payment. So meaning he is expected to pay back to you periodically, while you purchase that item from the seller on spot, but you sell it to him based on deferred payment. As you can see, just looking at just the mode of buying and selling alone, there is technical difference between how an Islamic financial institution operates and also how a conventional institution operates. In the Islamic financial system, we have what we call the internal Sharia audit, who will ensure that after every transaction has been concluded, an audit will be carried on to know whether that particular transaction is Sharia compliant or not. If there is any activities that have been deduced to be Sharia non-compliant, that income will be declared not permissible. That is impermissible, and it will be paid to charity as an impermissible income. So we have the internal Sharia audit, you have the Sharia compliance unit, you also have an external Sharia advisor who will ensure that, which we also call, you can call it Sharia board, you can call it advisory council of experts, who will ensure that the activities of that particular financial institution remain Sharia compliant throughout the life cycle of such business. And the essence is to ensure that everything remains Sharia compliant. So the misconception that there is no difference between Islamic finance and the conventional finance is actually spurious and is not correct. So I'm telling you today that technical difference between the two, and there is also theoretically different. Theoretically, they are not the same. Technically, they are not the same. But however, what joins us together is that both entities are allowed to make profit, and there is no end to charity. We are not in business to also, you can do business charity-wise, and there is nothing stopping you from also doing it in a commercial angle. And this is why Islamic finance recognizes both the commercial business entities and the social aspect. So I believe in some of our podcasts or in some of the videos, you understand the social contracts under Islamic finance, and I believe we will be understanding the commercial contracts in which we've explained the Mudaraba in our last video. And today I'm talking about the misconception about Islamic finance vis-a-vis the conventional finance. Thank you very much. I remain Ismail Rufai, and I believe you can still listen to some of our audio on Spotify when you search Understanding Islamic Finance by Ismail Rufai. Thank you very much.